Thank everybody, the audience, to be here. I hear we're quite a lot of people. I'd like to welcome both our speakers. Before that, I need to inform you that we're recording this webinar so that you will get the recordings on the Geneva Business School YouTube channel. Also, you may ask questions, which a best way to do it is to go down in your screen, at the bottom of your screen in the center, there's a Q&A box, and I will see them and ask the questions as we go. So today the theme is, should people invest in art? Is it a valuable, it's a tangible, of course, asset, even though that question can be asked as well these days. But is it a sound investment or not? And we have today Francesco GB from Lot Art in London joining us, art advisory firm, but he will tell us all exactly what the services are. And of course, John Plassard, who is working for Banque Privée Mirabaud in Geneva. And he will tell us all about, I know he's been supporting the art business for a while. I listen to your morning coffee break every day. And so I know what your thoughts are about the art investments, which pleases me no end. So thank you very much. Perhaps we'll we've got 1 hour, so please feel free to ask questions as much as you want, and let's make this interactive. So I'll start with Francesco. Are you an art historian? Who are you, basically?
Who am I? Good question. I am, my background is financial. I used to work for United Nations for many years as a monitoring and evaluation officer. So I looked at the financial side of things, and I discovered, let's say, the financial side of art later in my 30s, early 30s, when I decided to pull out from the stock exchange because of the financial crisis. And since I got in my life all the bubbles and all the crises possible, I was glad that at 30, I said, yes, I'm out of this.
I'm looking at you, sorry to interrupt you, but that seems like it was yesterday.
Yep, well, time flies. But yes, and I decided to invest my money in assets because they're solid realities and they give a side of the financials also aesthetic pleasure. So I'm a collector. So who I am an art collector. And I made of my passion, let's say, my job through the Lot Art platform, which I originally created for myself in 2015. But then, you know, since I'm very kind, I decided let's open from everyone. And now we have the last month we had 800,000 users in November. So it's a global platform. It's the largest aggregator for fine art and passion asset auctions. So I don't know if I am allowed to go on, or maybe I
go on. No, do explain what Lot Art is, what you do. I know, but I'd rather you tell it.
So I said Lot Art was born from necessity. So as a collector, as an eclectic collector, because I like many things you see behind me, neoclassical etchings of views over Rome of the 18th century. But beside prints, I also like Flemish female portrait from 16th to 18th century and contemporary photography. And to keep under control all these artists, it was physically impossible. You need to make hundreds of searches every day in hundreds of websites, and it's just not feasible. So I created Lot Art in order to give one platform, a comprehensive view of the global art market. So when you make a search, you can save your searches, and then even the system sends you alerts when something matching or taste your needs or your search comes out for sale. So what it does, it tells you what, when, and where, at what price an asset is coming on sale at auction globally. So
So
we
in
are the largest aggregator. So we have this competitive advantage, and that's why people uses us, because when you make a search on Lotart, you search the world of auction for both fine art and passion asset, meaning not only painting or statues, but also classic cars, fine wines, and watches, and vintage fashions like Birkin bags. As a woman, like a Hermes bag can be actually a good investment. Like every asset, depending on the price that you buy it. So that comes in the second function of Lotart, which is not only a search engine and aggregator, but also an analytic tool. So with our big data, we can identify the trends of an artist or a brand and model of a watch, or an artist, subject, medium, and size, because these are all factors that influence the price. You cannot compare pears with apples. So even you cannot just make a search for Chagall and put everything in it. You need to distinguish. So our system, it's actually keen and distinguish, if it's a painting, if it's a multiple, if it's a drawing, if it's a gouache. So it differentiates in order only to compare similar things and then set a price trend and a liquidity. A price liquidity information. So at what price should I buy this artwork in order to have in my portfolio a liquid asset? So normal people should buy what they like. I always tell people, buy what you like. Don't follow things that you don't like just because they might grow. At least I don't do it. I said I'm a collector, so my mind. But as a collector, when you buy things for a certain amount of money, you should pay attention at the value, because you're making an investment, and that's where the financial side of art comes out. So in my clients are also people that unfortunately don't care about the aesthetic or about the beauty or the history of the artwork. They just want to alternative product, investment product
to have in the portfolio.
Yes. So you diversify the portfolio because the art reacts differently to financials, so macroeconomic factors, like for example now inflation. It's really important. Now inflation is going up, so this is the best time to buy assets. I was predicting that inflation was coming up since at the beginning of 2020, and it's unfortunately it's coming. But what is the best way to save your money is to diversify in assets, because assets can retain the inflation. So when inflation goes up, the value of the assets goes up.
And Francesco, if I might interrupt you, I will show you after a very interesting chart between inflation and art, and I totally agree with what you say.
Thank you, John.
Yeah, I think it's again, this basic values like gold. There are refuge investments, and most banks, and I hope John will agree with me on that one too, but there are certain assets which in case of crisis and financial, and when we don't know anymore where the economy as the financial markets are going, people go back to real estate, to gold, and then hopefully to art as well, even though there is debate on that one too. Maybe we'll move to introduce John. So again, John is from Mirabaud Bank, which is one of the oldest banks in Switzerland, but also internationally, right? The private service has been, it's a family business for generations.
Yeah, exactly. 201 201 because it was last year that was that. Can you see my screen now?
Yes, we
sorry.
can. Thank you very much.
Okay. So you will see if I can just move on. Yeah. So just a few words about me. I'm a banker. Okay, it's 22 years ago. I'm doing that business. My father is in the banking business since 60 years. But I would say art is more a passion than anything else. And I have a very specific relationship with arts. Firstly, because my uncle was an antique dealer, and I used to hang out in his store in Paris when I was very young. So that was where I learned, some of the basic of arts, I would say. Secondly, because my wife's uncle is a well-known artist who won the Venice Biennale a few years ago with his masterpiece, The Clock. And finally, because I'm fortunate enough to have a partner at the bank here at Mirabaud who has purchased and displayed contemporary art in most of the clients' lounge. So I would say globally, it's more passion that is driving the interest I have for art more than anything else. So that's why I'm here today.
That's very good. That's what Francesco said as well. When somebody collects art, you have to like it first off. I mean, you shouldn't think investments or revenue when you're choosing a piece of art.
Yeah, I agree. And in fact, we'll talk about it after. But the fact is that, for example, here at the bank, when we buy a piece of art, it's not because we think it's going to take value. We estimate it at zero, and fortunately, the market there is a real growth in the market, but it's more passion than anything else. Yeah. Before investing in art for myself and of course for the bank.
So here we've got Christian Marclay you've put on, which is great.
Yeah, that's my wife's uncle. Okay. And so we have some pieces of art here of Christian, and he's often here in Geneva, and it's contemporary art, and he's always been passionate by music. This is tapes put on a painting, and this is other things we have regarding Mirabaud, as we are a member of several cultures exhibitions. And yes. Things like that, and what I said before, we're more driven by passion than anything else.
Would you like to go on with your presentation, and then it will probably raise questions?
Yeah, but you buy the painting, the Christian Marclay. I was just looking at my analytics. It gives yes. me a liquidity around $45,000.
There you go.
Okay, is it much or not? I will ask him to give me another one.
No, it's good. It depends. I mean, it's better to buy something, let's say, at 40,000 that it's worth 100,000 than buy something at 100,000 and it's worth 50. So.
It's good. We've got online a lot.
It was interesting for me when I saw the name. I said, "Let's see what I have."
Yeah, that's fantastic. We can. Yeah. I'll look at. I didn't look at it, to be honest, Francesco. But I will look at it after. But it's not real. I don't have a real presentation. In fact, the thing is that there are several things we can say about. There are millions of things we can say about art, and in fact, regarding clients, what does it mean to invest in art? Because when we talk about there is passion, but some other people are more focusing on the revenue they can make on pieces of art, and especially contemporary art. And we see that there's a good growth in it. And we can see that, for example, arts globally has a better return than the S&P 500. You can see one chart here, interesting chart, that over 25 years,
25
contemporary
years.
art has outperformed nearly 3 times compared to the S&P 500. So 13 or 14% for art, contemporary art, compared to 9% yearly for the S&P 500. So this is the first argument, I would say, if you're thinking not only about passion but investing in art. The secondly, there's a low correlation, and Francesco, you were talking about it before. There's low correlation between art and especially, again, contemporary art with other asset classes, because contemporary art is found to have an attractive long-term performance with a low correlation with traditional assets as stocks, bonds, even gold, which make it fully fledged investment. And finally, there is low losses. During last 25 years, I think contemporary art has recorded losses only 4% of cases over an investment horizon of 3 years. So we see here only in terms of investment is something that is really interesting as well.
I would like to ask a question to the banker now, because having spoken with, I was also in a bank for a while, not the same one, but I was also in one of the Swiss private family banks. And all my friends who are still in that and are client advisors or even analysts for the banks, they will not take art into consideration because their excuse, if I can say, or their argument is that there are no there's no track record which is actually indexed. You can't, it's a subjective thing and it's very difficult to evaluate. So when you show them that sort of chart, I'd say, well, you know, it's obvious and it's been going for 25 years, but bankers are still a bit cold-footed.
Fully agree with you, Sixtine. And this is I would say the other side of art as an investment is opaque. Of course, and the subjective nature of the art market means that the value of a piece, but Francesco, you know that better than me, can fluctuate just by dint of being or not being included in certain exhibition, for example. So this is something that don't happen, I would say, with other assets as gold or even stocks. So this makes managing the value of a collection a delicate task and puts a premium on an advisor with expert knowledge and etc. So it's I mean, it's not a niche, but it's kind of a niche, if I could say that. So that's totally different from again from other assets. And lots of painting are also enhanced by being exhibited, and in the same way they can be dismissed if they are put in the wrong exhibition or not. So that's why, of course, but I think there is a difference today that they were 40 years ago. It's something completely different. It's more mainstream, if I can say that, even that some of the art pieces are very expensive, I would say, but it's more mainstream and I would say less opaque than 40 years ago.
This is also why I convinced Geneva Business School to take on this MBA in art management, which I put together because I feel that people who are in the service industry of banking, legals, or whatever, the industry is expanding so much that we need formal training. So hopefully it will take on.
I think, Sixtine, if I may add to your thoughts, one of the main reasons that bankers don't propose art as an investment to their clients is because they don't understand it. So they need to have an expert, so their margins are lower, and then they gain less. So, but as a diversification, it's very valuable for the client, for the person, because aside, all this opacity, it's a lot also on, or the high fluctuation or high volatility is a characteristic of contemporary art. When you go in antiques, then the fluctuation are much lower.
Yeah.
And if you know what you're buying, obviously, so if you buy a print of Dürer, like the Horseman of the Apocalypse, and you know which edition you're buying, the value of a Meder A, B, C will not go down. It's 500 years is around. And scarcity and the request, so the demand of the market, all at the worst, it doesn't lose, so it keeps stable. So for my analytics, Dürer is one of the best cases to offer to people who are risk adverse.
Yep.
And they're looking for an investment which is not volatile and will keep the value together with inflation, and is going up. So my analytics tells you in the last 5 years is going up. All the art business is going up. But I said the difference between antiques and, of course, well-known antique artists compared to contemporary, which might perform better, like Bansky, for example. It's like boom. But that is difficult, though, to of course, if you're smart, if you are into the market, you can understand which one might go up better than others. But for a client who's risk adverse and he says, I want to put $100,000, $200,000, I'm afraid, then there are artists which our system, which is a statistical tool based on events, real historical events, tells that they go up slowly. They'll keep. It's like bond. It's like a bond.
It's true, but for that you need the training. We have a Martin Gies who's joined us on the chat box, and he says, of course, this art knowledge and training doesn't just apply to collectors, or it doesn't just apply to bankers or legal, but also to people in museums like curators. I mean, we're in a lack of training at the moment. So let's go back to finance with John. That's a very interesting slide here.
And I think if I can jump on, and I think that's the very, very important part of the investment, because there are many approaches. You have many private banks now that have art advisor units with a register, former curators, gallerists, and other art specialists. For example, Citi, a private bank, set up a unit in 1979 already, and made his first hire in the art field in Hong Kong 3 years ago to serve, the Asian market. So today, for example, if we talk about big banks, big American banks, Citi has 7 strong team, including former curators, advisor on piece and to buy, where to exhibit, as well as planning issues such as inheritance and succession for people that have arts. This is, I would say, this is the first approach, and the second approach will be more the one that we have. We are not the only one, please believe me, but that we have at Mirabaud, because we have 3 approaches. The first is quite paradoxical, but Mirabaud, as I said, is a bank that was created more than 200 years ago, but we do everything that we can to invest in contemporary art, which is something that is real and that gives a sense of the future. So this is the first thing. Second thing, for us, investing in art is also a way of investing in future generations, so they can be the guarantors of our cultural heritage. It's very important. This is a theme where we don't talk about. And finally, investing in art for Mirabaud is also a gesture toward the ESG, that everybody's talking about.
Very important.
Like the greenwashing. But arts for us is if you take out the S of the ESG social, so which include the cultural aspect. Sorry. So I would say that when we buy, we don't speculate. Personally, here, it's as we said before, it's a passion, but it's also we buy a piece of art based on vision of the future, preservation of a cultural heritage, and a new step towards ESG. So this is our approach, and we're lucky will not be the good word, but that all this asset in arts is taking value every year, because I think the first thing is passion.
Yeah, absolutely. We'll move on to the history and the preservation a little bit later on with the digital tools that are that are existing at the moment. But we'll just continue a little bit because I think our audience is very interested in the presentation.
Okay. So we're here. It's just example, and Francesco, maybe you could give 2 words about the fact that art is something very interesting in the environment of inflation. And everybody's talking about inflation because the oil price is going up, food price is going up, everything's going up. Central banks, that's my bread and butter, but central banks say, I set in the US to put rates higher because there are too much inflation, blah, blah, blah. But arts, historically, is a very good hedge against inflation. Maybe, Francesco, you can say a word about that.
Sure. Thank you. Yeah, I mean, is art as an asset class is interesting for purpose of portfolio diversification. Because I talk and I stress on the word diversification, so I never tell people put everything you have in art. No, diversify. Diversification is never wrong as an economic scholar principle. And why is art can be positive for the diversification of a portfolio? One of these things is protects the capital against inflation and also forex volatility. There are different use that you can do of an asset that you can resell. So the liquidity of art as an asset is given by the existence of the possibility to resell it at auction. So you don't have to find yourself a buyer, which would make it illiquid. So you can bring your artwork to an auction house. They will estimate it for you. If you agree with the estimate, then you put it on the market. Of course, depending on what price you pay for it, and I stress this, another first factor, you need to buy at liquidity, meaning that you are aware of historical series, and you know that if you have a Gaussian curve, so you buy in the middle where most of the events take place. So if an artist is normally sold, subject, size, and medium, is sold, let's say, around 100,000 to make it easy. Then you have liquidity up to 100,000. The more the expensive you buy, the less liquidity you have, meaning the opportunity to get your capital back when you resell. Now, where inflation comes in. So in moments of high inflation like this one, which it's compared to the 80s, just to give an idea. So this is just the beginning. So that's why I feel lucky that I invest in assets instead of other financial products, because an asset just grow like everything else, like the food grows, like shipping, like any kind of services, anything, prices goes up because of inflation. And also the print, which is on my back, it grows when I sell it. So if we have 5% inflation, that will be reflected in the price when I sell it at auction. Also because people, it's a banded bagel as well. So so people know that they should diversify more in asset, so they invest more in asset. Therefore, demand grows, and more requests of us on art also brings the price up.
Yeah.
You
also, I think that within an art management
also, but once you have a tool which tells you the trend of the price, you can be comfortable in investing at a specific price. So if you really want something and say, okay, I'm willing to pay double for it, well, then I don't know if it's a good investment. You get what you want, so it's justifiable from your heart, I think. But as an investment point of view, no.
I think there's also, you need to follow trends. I mean, there are fashions, of course. I mean, we've got your
fashion comes and go, though. Huh?
Yeah.
Like this, for example, it was super hot up to 2007-8. Then it went down, and now it's hot again. And then there is a geographic arbitrage, which I didn't say yet, but it's very important. Artists have not the same perceived value everywhere in the world, depending on the taste. Like, for example, I found it was a German artist. I just bought it yesterday, so that's why I'm saying. And it was sold in Cologne. There were 5 paintings of this artist. They all sold but mine, which I bought afterwards. Why? Because that was depicted in Amsterdam, and people in Cologne didn't care. And all the rest was Germans, to me, unknown subjects, which were known to them, and they all sold. And I bought mine lower than the average, because if the same one was sold in Amsterdam, it was been vice versa.
Of course, there's that emotional aspect that links people to a purchase. That's always true.
Yeah. And geography as well, because for me, of course, it's nice because it's a Damarack Street, so canal, so it's near my house, and I like it. But for somebody in Germany, what is it?
Doesn't mean anything, of course.
Exactly. So geographic arbitrage is another thing that you need to pay attention. So when you have a tool that tells you where to buy, not only what to buy, at what price to buy, but where to buy in order to find the best deals, and then also where to sell. Like neoclassical etchings are good in Zurich, are good in Vienna, are good in Munich and in New York.
Then you've got your exceptions. You've got exceptions where the auction house decides to put an Italian Renaissance into a contemporary art sale, and it makes $450 million.
This is marketing. Okay, not every auction house has the market traction of Christie Sotheby's.
Yeah,
of course, there are pools of marketeers behind that pushes it.
And Francesco, just to add a word regarding geographic, it's very important, because when you know that China and the United States generates almost 70% of global auction revenue. So I mean, if you're not in this, field, you might pay less. That's what you said, Francesco. But if you are with Chinese or American buyers, you might pay more, not because of the piece of art, but just because they are very, willing to buy. They know that, in fact, it's something, as we said before, where there is a good growth and good way to of course, passion, but also to earn money several years after. And we see that the market has fully and had profound structural changes since 20 years, because we have more artists. If we talk about, of course, the how do you say, the contemporary art. We had 20 years ago, I think we had just like almost 5,000 artists, and now nearly we have 32,000. And the number of works went out from 12,000 that was sold 20 years ago to almost more than 120,000 today. So things has changed very fast in the last 20 years in terms of contemporary art.
I think also with the coming of internet, people were able to search things and to do it online, and you didn't need the advisors as much, or perhaps even more. I don't know.
That's a weak thinking, not needing the advisor, because then it's like you go to Monte Carlo casino. It's the same. If you're lucky, you're lucky. I mean, I like this, and it goes up. You're lucky. But if you started it and you know why it will go up, or all the if you have enough, it's called information asymmetries. This is the second big market traction. The other force who rules the market. Some people don't know what they sell, and some people don't know what they buy. And this convergence. So that's why who has the positive asymmetry wins.
But please go ahead, Sixtine.
I was going to say, if it comes to training, I'm an art historian, university degree, etc. But I mean, my first job when I was 22 years old was with Yann Crugier, and I have to say he was one of the top dealers at the time in the early 80s. And I learned everything from him, and it was all about training. And if today I have also a collection, and some of them did well, some of them are total unknowns. But for those who did well, I think it's also because I have a training in my eye, I have the knowledge of the history of art. I can make assumptions or predictions because of what I know. And I think most people are the same. You need that experience, it comes with time, but you need training. And being able to analyze the results of a database and all that is also important. And I think today, because of the internet and all those possibilities, it's important that people learn how to use the tools. I totally agree with that.
But I will also say something, 40 years ago, you will spend your whole day in an art collection, in a gallery, and look after the work that might soon be something in your intimate environment. Today, it's the same, but collectors are more likely to dip into a fair booth, wait for digital images and prices on your iPhone. And I mean, things go way faster. And I don't think it's not because you're not passionate. It's just because things change in the way you can buy. You can look at it. And for example, with your website, Francesco, I think kind of you didn't have that 40 years ago. So it was much more opaque. And the prices were less liberal, or more liberal than today. And now if you look at prices, you cannot really sell them at a crazy price if you look at what happened on your website. So I think the passion is still here, but the tools and the way how to look at it are different today than 40 years ago.
Absolutely. Shall we move on to the next slide so we can then have full portraits?